How much gold and silver do you need to retire, or maybe to fund your retirement? Now, I don't mean you should go out right now and buy a boatload of gold and silver and hope that it will go to the moon and then you can sail away into the sunset of Malibu on your beautiful mega yacht. I'm talking a little bit about the kind of less sexy and less cool approach, which is about long-term prudent financial planning. There's a phrase that I absolutely love to say. You have a fiduciary responsibility to yourself to look after your finances. And for me, I personally don't want to be working. I love you all dearly, but I certainly don't want to be pouring silver and making YouTube videos well into my retirement. Quite frankly, all I would love to do is just sit back and read a boatload of books. I miss reading books once you get busy with work, busy with life, busy with kids. I tell you what, you just don't read enough books anymore. But how do I get there? Well, gold and silver form a big part of my long-term financial planning and my retirement planning. And I want to talk today about that because it's not sexy. People don't talk about retirement. People don't think about the future. We're very focused on the here and now right now in this world, which, you know what, it's understandable because life's hard and things cost a lot of money right now. And it's difficult to really see how people can plan for the future when they can't even necessarily either get on the housing ladder or just have enough money to pay for gas or petrol, as we call it here in the UK. I'm so Americanized by this channel, it's hilarious. Or just even groceries right now. It can be really, really difficult. So if you are fortunate enough to have that stable income and you are now considering, or you have already started buying gold and silver, how does it fit within your long-term financial planning? Now, it is very important to countenance this video by saying that I am not a qualified financial advisor. What I'm saying here is not financial advice. It's just my observations as a gold and silver buyer and investor over the last 11 years. I've been buying silver and gold for a long time. I have integrated it into my retirement savings in that I have a certain amount that I'm going to keep and I'm going to use it as a way to subside when I decide to stop working. But what does that look like? How much do you need? I'm going to ask those questions. And I would love to know your thoughts down in the comment section. So let us know what you're planning to do with your gold. How is it going to help fund your retirement? Or is it even going to just be a skip to the next generation? These are all viable things that people just kind of ignore right now in the mainstream. And I think it's really sad because it's hard and it's going to only get harder because the nuts and bolts of things are we can't trust social security, we can't trust national insurance, we can't trust state pensions here in the UK. God, I mean, even the National Health Service could fall down. There's a social care crisis here in the UK as well. Having money in your retirement is just important. It just factually is. There is no way about it. It is just very important to have. So plan early. What's that phrase? Failure to plan is a plan to fail. So just make sure you've got something there. So before we jump in, what I will say is there are a whole host of other ways that one can invest for retirement to gold and silver. And whilst I am a gold and silver channel, I also have what are called here in the United Kingdom self-invested pension plans. I'm self-employed. I have been for now, since 2014. So I've been self-employed for 12 years. And you don't get sort of big pensions from nice companies. Here in the UK, we get a state pension, but I won't get it until I'm 68, 69, and it's going to be a pittance. So I've always been really hot on pensions. I've saved in company pension pots. I've amalgamated them all into what's called a self-invested pension pot. If you're in the US, there are these accounts called IRAs, as I understand, or IRAs. It's very funny because we say IRA here in the UK, we think of the Irish Republican Army and all the bad things that go along with that. But in the US, there are Roth IRAs and IRAs. I'm not entirely fully versed with all the differences, but there is a great link in the description box below to Noble Gold Investments, who are sponsoring our channel, and there's a great amount of information about them and how to hold physical gold and silver in your IRAs. So go and check them out if you're interested. But what I would say is having a stocks and shares SIP, self-invested pension plan, having stocks and shares within an IRA, really, really important. Long-term growth for what you want to achieve with your pension, great. However, SIPs and self-invested pensions have limitations in that you can't access the money until a certain point in your life. For us here in the UK, currently that is 58 for self-invested pension pots. And then, of course, there are now a whole host of tax implications on these kind of things about how you take the money out, how much tax you pay when you take the money out. you know, it's one of those things where it's nice to have a lot of tax coming out of them because you've earned, you know, potentially good gains on it, but ultimately you still have to pay some tax on it. One of the best things about gold and silver, though, is if you invest in the right things, there ain't no tax to pay, partly because you're investing with already taxed money. Now, interesting side point, if you do put gold or silver into an IRA, or a Roth IRA, or a self-invested pension pot here, you can't, I don't think, buy physical gold and silver in the UK through a self-invested pension pot. Not that I know of. If you do know of one, let me know. But what you can do is you can, of course, buy gold and silver ETFs, tracking funds, those kind of things. And if you put money into those accounts, you get tax benefits. You get tax relief on the way in. So you get more money to buy. You get better bang for your buck. And the government has less cash in their pocket because they're giving you tax relief, which is always a good thing. I'd rather have my tax now, invest it now, and have to pay a bit more tax later on, but ultimately still have a tax saving. However, gold and silver, capital gains tax exempt products like Britannia's are just worth their weight in gold, literally and figuratively. Okay, so sovereigns. If you buy sovereigns or Britannia's right now, you are already taxed on the money when you obviously earn it, and so when you buy this stuff, you are going to be tax-free when you sell it. Now, that doesn't mean you're going to have to answer some silly questions from our tax authorities, like say HMRC. I've done videos on this before. Keeping records is super important for all of your investments and your gold and silver especially. If, for example, you just take a boatload of gold, let's say you get to your 65th birthday and you're like, right, I'll pay off the mortgage with me gold. And you walk into one of the big bullion dealers here in the UK and you sell it all. They'll take a record of that. They'll pass that record most likely onto HMRC, or at least your bank will certainly know about it. If you've got a sizable amount and you get a couple of $100,000 in that you've saved over 20 years, you will get flagged. They will ask you, I have no doubt, even more so in, say, 20 years' time. So being very vigilant with your record keeping, super, super important. But the good news there is that it's tax-free. Now, there are some worries at the moment that the new Andy Burnham Labour government is going to start changing capital gains tax, and maybe they'll take away the status of Britannia's and sovereigns as CGT exempt products. I don't think they will. I think that's too much of a step. I've talked about that before when we were talking about the budget a couple of years ago in the build up to that. One thing I do think is going to happen is for non-CGT exempt products like bars, even by the way, bars from the Royal Mint. So the only CGT exempt products are coins from the Royal Mint, but bars of gold, bars of silver, even my own hand-poured silver or collectible coins from other countries, things like that. Those are chargeable assets. You will pay CGT on them. I can see the Burnham government increasing the CGT rate to be in line with your income tax. So if you're a higher rate taxpayer, here's a little sort of tip that works right now based on the current market. Again, not financial advice, not pension advice, not tax advice. But if you're a higher rate taxpayer earning decent money, you're in the higher rates of tax, you've got some items that are CGT-able. If you sell them, you pay, under the new rules that could come in, 40% tax. Well, just wait until you're a pensioner, because I guarantee, unless you've got a gold-plated pension, you won't be paying higher rates of tax as a pensioner. And then you'll be a lower rate taxpayer, and you can sell these at 20% CGT rate. So just hold. And that's the stupid thing about this new CGT talk. If the government increases the rates of CGT that you pay, people are just going to hold on to it and wait until they're not a higher rate taxpayer, and then they'll be absolutely fine. So that's one thing. These are just brilliant coins. Now, how about the practicalities of gold versus silver for retirement? Now, for me, it's always been about gold. I love silver. I think silver's got a lot of potential. There is no doubt that silver is a volatile metal and such that the gains could potentially be quite nice on it. However, let's do a little bit of the maths. Let's just say you have got a half decent job and you've got yourself your mortgage, you're paying off your mortgage, and you've not got kids. I wish, well, I love my kids to bits, but you know, from a financial perspective, they are a little bit of a leech on the old bank account. So let's say you are child free, you've got your mortgage, you've got a nice little house that you're living in, and you've got a good job. It's not unfeasible that you would potentially be able to save £1,000 a month, or maybe £750 a month, which right now buys you a sovereign a month. Now that would be lovely. And I'm also going to hear a lot of people in the comments going, there's no way you can afford a sovereign a month, which is why I have to buy 1 gram of gold a month because I can only afford it. That's absolutely fine too. But my personal opinion is don't buy 1 gram gold bars. Save up every 3 or 4 months and buy a half sovereign because they're much cheaper, the premium's better, and they're CGT exempt. So whatever your budget is, whether it's £750 a month or not, we're just going to work off that right now because this is, I think, going to be eye-opening for a lot of people. If you save 1 sovereign a month or the equivalent in silver, which works out to be about 13 ounces of silver, for 20 years, because let's do the maths. If you want to sell 1 sovereign a month to help fund your pension, you get to 65, you live to 85, that's 20 years. So you're going to match it now. You're basically 45 years old, you're going to start matching it. That will be quite a lot of money by the time you get to 65. We don't know where gold price will be, but if you do £750 a month times by 12, times by 20, that's £180,000. Now, the way I look at it is you got £180,000 across that lifespan. Yes, some of it will be more expensive nearer the final end of that, but the stuff you're buying now will be the first bits essentially that you sell. It's kind of weird how we rationalize things, but as a 45-year-old, you buy a sovereign. When you turn 65, that's the first piece of gold that perhaps you sell to fund your retirement. Okay? Now, that's quite a lot. Across the whole lifespan of that 20 years, if you're doing the same in silver, you'll end up with close to 3,500 ounces of silver, perhaps a little bit less, 3,200 or so. 3,000 plus ounces of silver, 93 kilos, that's quite a lot. You know, the impracticalities of that, which is why gold always holds true for me. Also, who knows where prices will be in 20 years' time. And you've got to think of it like this. The money that you save now is money transported through time. So the £750 you spend on your sovereign today is going to be the equivalent buying power of £750 worth of sovereign, or money I should say, when you retire. Now, can you say the same for state pension? Now, there are here in the UK this thing called the triple lock. It's unsustainable. Now, I don't like being too political on this channel, but it's a political hot potato that nobody wants to look at. And at some point, it is going to break. The system is going to break. State pensions will break. People will be really hard up because, unfortunately, we're in a first world society problem where you can afford to sort of save gold and silver for your pension or save money for your pension. But if you can't afford to buy gold and silver or put money into a personal pension plan, and you don't have the means to do it right now because you've got mortgage, rent, kids, food, petrol, gas prices, all of these things, what's going to happen in 20, 25 years? I'm really worried for a lot of society, and it really is not good. So if you are lucky enough to have the means by which to save some money right now, then gold and silver are great. And for me, it's always formed that. So the goal would be lovely to have enough sovereigns to sell 1 a month for 20 years, 240 sovereigns. It's not, it sounds like a lot, and it is a lot. I mean, I'm not going to ignore the fact that saving 1 sovereign a month is hard. And if you are on different budgets, or perhaps your job and your life circumstances doesn't afford you the ability to save that much money every month, even half of that is still a lot of money and a great way to top up a pension. Now, from my own personal situation, I don't want to work until I'm 65. I love you guys to bits here on YouTube, but I don't want to be on YouTube talking about gold and silver for another, I'm not going to tell you my exact age, but for another 20 plus years. I've done it for 10 and it's been fantastic. But the thought of doing it for another 25 plus years ain't that much fun, not going to lie. So I want to stop this at some point. I don't know when it will be. And what I'm going to use my gold and silver for is bridging myself when I'm perhaps not earning a great sum of money. And having that sort of little bit of a career break. Now, I'm not going to lie, I've also got stocks and shares investments in other things that are, at the moment, doing quite well. There are certain things I'm doing well in. But they have very large capital gains tax bills, and with the new changes coming in, that's not looking great for me. So, well, it's a first world problem, isn't it? Because you've got all these gains that you can't avoid paying capital gains tax on. So there is going to be a point where I will be able to take a break. I won't be able to stop working entirely. Nobody really can in this world, especially when you have kids who need educating and need food and clothes and God knows what else. And when they get to be teenagers and young adults, this financial burden won't ever stop. So there will be a point, however, where I will want to actually enjoy a bit of life. And like I said earlier in the video, just actually read a book. I used to read so many books. I just haven't had the chance to sit back and relax and read. And I really want that at some point. But I'm not there yet. I'm not sort of sit in the garden and read for the rest of my life quite yet, but one day. So gold and silver form a big part of that. And I hope this video has been somewhat enlightening to you. I sort of have tangentially rambled a little bit in this video, but ultimately the message here is if you want to have gold and silver to retire, it's possible, yes. Is it going to be the entirety of your portfolio? In my opinion, that should be a big fat no. It should form part, The best way that I think people can use gold and silver is a top up to a pension. It can be used to help get you perhaps bridged until you can get access to your pension. So from my perspective, I can't start taking parts of my personal invested plan until I'm 59, I think it is. So maybe stopping work at 55 and having 4 years where I can use my gold to subside, to pay bills, to get over the line is something that's workable for me. And then when state pension kicks in at 60, gosh, what is it, 68, 69, I think for me, if I'm even alive by that point, who bloody knows? You know, that's where we go from there. It's difficult. Even when you have the savings and you have gold set aside or silver set aside, you don't know what's coming down the pike. You don't know what's coming in the future, but I think we can all agree that what is coming in terms of state benefits, in terms of social security, the mess that money is in, we know we're in trouble and we have to take responsibility for our own finances. We have a fiduciary responsibility to ourselves, my favorite phrase. I think that's going to be the cool kid club phrase for today's video. So let me know if you cool down in the comment section and we'll see you down there. Otherwise, that's it from me. We'll see you on the next video. As always, make sure you like, share, comment, and subscribe for more.